Lanka's external sector was pressured further in September 2018, the continued widening of the cumulative trade deficit for the first 9 months of 2018, declining in worker remittances and the strengthening of the US dollar, which resulted in outflows of portfolio investments from the country. Merchandise exports grew by 4.4% year-on-year in September 2018, surpassing $1 billion for the fourth consecutive month. This was mainly driven by a growth in exports of textile and garments, reflecting a considerably high demand for the garments from the USA and non-traditional markets such as Canada, India, and Japan. Merchandise imports outpaced the growth of exports by growing at 6.1% year-on-year to nearly $1.8 billion, reflecting the high expenditure incurred on fuel due to the combined effects of higher import prices and volume of crude oil and refined petroleum products and personal vehicle imports. Moreover, import expenditure on textiles and textile articles, fertilizer and chemical products increased considerably. Worker remittances declined by 7.1% year-on-year to $500 million during September, whilst earnings from tourism recorded a marginal growth of 2.8% year-on-year to $276 million in September as a result of the decline in the number of tourists arriving mainly from India, Maldives and France. In the portfolio investment front, government securities market experienced a withdrawal of foreign investments of $152 million in September, raising the net cumulative outflow to $468 million during the first 9 months of 2018. Further, long-term loans to the government recorded a net outflow of $63 million during September 2018 as loan repayments exceeded loan inflows. Resultantly, the balance of payment position recorded a deficit of $650 million. The Sri Lankan rupee depreciated by 15.1% against the US dollar during the year to 29 November 2018, reflecting a broad-based strengthening of the US dollar, outflows from the government securities market, and higher demand for import expenditure in the foreign exchange market. Thank you for tuning in, and do join us again next week for another update.